Hello everybody, Assalamu alaikum sir. Welcome to our presentation. The name of our topic is Transaction Analysis and Basic Accounting Equation. My ID is 143154261 and I am Shihabuddin Muhammad Omar. Today I will cover the importance of accounting, the definition and the bookkeeping. So here I am going. Before I will talk about the importance of accounting, let me talk about what is actually accounting. So I will go about the accounting sector first. So what is accounting basically? Accounting is the semantic and comprehensive recording of financial transaction pertaining to a business, and it also refers to the process of summarizing, analyzing and reporting those transactions to oversight agencies and tax collection entities. Accounting is one of the key functions for almost any businesses. It may be handled by a bookkeeper and accountant at small firms or by sizable finances department with dozens of employees at the large companies. So this is all about accounting. Accounting plays a most vital role at the economical sector worldwide and nationwide. So now I will talk about the importance of accounting. Accounting or accountancy is no doubt the universal language of business and figure. Those that fluently speak the languages are called accountants, and the accountants are so much important for maintaining account. The importance of accounting cannot be overemphasized. Imagine what this world would like if all means of communications are removed from our daily activities. The world would be full of chaos. How then do people expect business and financial environment to be free from the financial trouble and global economic meltdown when a lot of people fail to appreciate the importance of accounting and accounting informations? In these sectors are some of the important of accounting and accounting information. So here are go. Importance of accounting and accounting information system. This section of this part will dwell on the reasons why a business enterprises must have one form of accounting or the other. Notice that the points discussed in this part of the article applies to both profitable and the non-profitable organizations. And another sector is analysis, purpose and decision making. All our business and economical informed decision making are based on sound analysis or financial statement, which is a product of accounting information system. Without a properly kept accounting, this object will probably not be achieved and business executive will be acting in blindness. Investors, both current and potential, base their investment analysis on accounting information. Information on profitability, liquidity, efficiency, etc. are all obtained from the information provided by the accounting information system. The third part is record keeping. No economy will stand well economically if records are not well kept and acted upon. Accounting is one of the primary vehicles of record keeping. Data are gathered from their various resources, collated, organized, analyzed, interpreted and communicated to the end users for an informed economic decision making that will in the long run yield positive fruit. Countries are able to plan their economic activities are chiefly as a result of the valuable information gathered through all forms of accounting. Governments use the records of companies to make fiscal and monetary policies. The fourth is prevention of fraud and discovery of fraud. Frauds can only be discovered and prevented in an environment where there is good internal controls in place, and a good internal control cannot be placed where there is no form of keeping track of events. Accounting and accounting information system is the only way of keeping track of all these in effective and efficient manner. Reputation and credit building. Reputation as business credit scores can be improved by the simple act of establishing an operation of a sound accounting information system in organizations. These above 5 points are some of the most important of accounting and accounting information. If accounting is not that important, why when did God Almighty bother himself in becoming the first accountant? We don't know what God is an accountant. If not, how then did we have record of the account of creation well documented? So yes, now that we have known the importance of accounting, accounting is the most important part of the economical sector. Here are about the importance of accounting. Now I'll go to the bookkeeping sector. Bookkeeping is the recording of financial transaction and it is a part of the process of accounting in business. Transactions include purchases, sales, receipts and payments by an individual persons or an organization. There are several standards methods of bookkeeping such as a single entry bookkeeping system and a double entry bookkeeping system. Bookkeeping is usually performed by a bookkeeper. A bookkeeper is a person who records the day-to-day financial transaction of a business. He or she is usually reasonable for writing the day books which contain record of purchase, sales, receipts and payments. The bookkeeper is responsible for ensuring that all transactions, whether it is cash transaction or credit, the bookkeeper brings the book to a trial balance stage. An accountant may prepare the income statement and balance sheet using the trial balance and ledger prepared by the bookkeeper. So here are all my parts about the bookkeeping, accounting definition and importance of accounting. Now I will invite my next presenter, Raika Binte Tora, for telling her parts. Thank you all. Thank you, sir.
Thank you, Shihab, for inviting me. Hello, everyone. My name is Raika Binte Mustafiz, bearing the ID 151155265. My part is users of accounting information, ethics, and measurement principle. Users are the most important part of accounting. There are two types of users: internal user and external user. Internal user are those individuals or groups who are within the organization, like owner, management, trade union, employee. And external user are those individuals or groups who are outside the organization, like shareholder, creditors, bank, lending agency, government, tax, regulatory agency, and researcher. Then my part is ethics. Ethics, the standard of conduct by which actions are judged as right or wrong, fair or not fair, honest or dishonest. This is called ethics. Accounting ethics is primarily a field of applied ethics and is part of business ethics and human ethics, the study of moral values and judgments as they apply to accountancy. It is an example of professional ethics. Accounting, introduced by Luca Pacioli and later expanded by government groups, professional organizations, and independent companies. Ethics are taught in accounting courses at higher education institutions as well as by companies training accountants and auditors. There are some terms of ethics. They are recognize situation, analyze elements, and identify alternatives. There is also some accounting organization like GAAP, Generally Accepted Accounting Principle, then IASB, International Accounting Standard Board, IAS, International Accounting Standard, IFRS, International Financial Reporting Standards. Then come the measurement principles. Measurement principles, uh, it is the computation of economic or financial activities in terms of money, hours, or other units. An accounting measurement is a unit of some measurable element that is used to compare and evaluate accounting data. There are two types of accounting principles: historical cost principles, uh, Under this concept, assets are recorded at the price paid to acquire them, and this cost is the basis for all subsequent accounting for the asset. For example, if a piece of land or jewelry or any kind of elements is purchased for 5 lakh taka and its market value is 8 lakh taka. At the time of preparing final accountants, the land value is recorded only for 5 lakh taka. Fair value principle. Fair value is the current price or value of an item. For example, if a price of land or jewelry or any other elements is purchased for 5 lakh taka and its market value is 8 lakh taka, at the time of preparing final accountants, the land value is recorded for 8 lakh taka. Thank you.
Hello everyone, my name is Mushfiqur Rahman and my ID is 151155064. So today we are talking about the transaction analysis and basic accounting equation. So here we are talking about the assumptions and business enterprise to the sections of economic section and to the accounting. So basically what is assumption? So there are several kinds of assumptions, but we are talking about the monetary unit assumptions. Actually, in accounting, only those business transactions and events which are financially nature are recorded. Financial nature are recorded. For example, when sales manager died, the business is bound to suffer. This fact will not be recorded because it cannot be measured in terms of money. So this is the monetary assumption, and the other one is economic entity assumption. This assumption requires that the activity of entity be kept separate and distinct from the activities of its owner and all other economic entities. According to this assumption, business is treated as a unit or entity apart from its owner, creditors and others. In other words, the proprietor of a business concern is always considered to be separate and distinct from the business which he controls. All the business transactions are recorded in the books of accounts from the viewpoint of the business. So that's all about the economic entity assumption. So the second I will discuss about that it is this is the business enterprise. Basically, there are three kinds of business enterprise. The one is proprietorship business. Actually, what is proprietorship business? A business owned by one person is generally a proprietorship. In this business, a small amount of money is necessary to start the business. The owners bear the loss or receive the profit and personally liable for all debt. The second one is partnership. A business owned by two or more person associated as partners is a partnership. For accounting purpose, the partnership transactions must be kept separate from the personal activities of the partners. So this is the concept about the partnership business enterprise. And the third one is corporation. So a business organization. So a business organized as a separate legal entity under state corporation law and having ownership divided into transferable shares of stock is called a corporation. So that's all about that the business enterprise, and it's all together really important for the economic and the accounting transactions. So that's all about. Thank you. Thanks for watching the video.
Hello everyone, Assalamu alaikum. Myself Sama Yasmin. So you already know the necessity and basics of accounting. Here is the accounting equation, that is A equals to L plus OE. First of all, we have to know what these things are. Here is for assets. We can see here assets are resources a business own. The main thing about assets is assets provides future economic benefits or services. Like we can be benefited by assets in future. There are two types of assets. These are current asset and long-term asset. So current assets are something from which we can be benefited for 1 year, and long-term assets are something that we can be benefited for more than 1 year. Here is another term, that is liabilities. Liabilities are claim against assets, that is existing debt and obligations. Accounts payable can be counted as liabilities. Liabilities means someone owes something from us. Suppose you need 1 lakh taka, and you have 50,000, and you borrow 50,000 from someone. That 50,000 that you have borrowed from someone will count as liabilities, because you have to pay that. So here is another term, that is owner's equity. What is owner's equity? The ownership claim on total assets in owner's equity. It is equal to total asset minus total liabilities. There are 4 terms that stays in owner's equity. These are investment by the owner, revenues, drawings, and expenses. The 2 terms that increases the owner's equity are investment by owner and revenues. So by revenues, what do you mean by revenues? Revenues are something that we gain by performing services. And there are 2 terms that decreases the owner's equity, that's are drawings and expenses. When someone withdraw taka from business for their personal use, will count as drawings. And we all know what are expenses. So you can see the expanded equation for the whole thing, that is assets equals to liabilities plus owner's capital minus owner's drawing plus revenues minus expense. The 2 term that increases the owner's equity will be in plus form, and the 2 term that decreases in owner's equity will be in minus form. So by this you will have a basic idea about the equation and the terms. Thank you everyone for listening.
Assalamualaikum. I am Sabina Satta Shetu and my ID is 151154756. Now I describe the transaction analysis. Here we can see 10 different types of transaction. First one is investment by owner. Suppose X invests 15,000 cash in business name ShopTech. We know that if someone invests money in business, we can take the entry in cash from the asset and also owner's capital from the owner's equity. Number 2 is purchase equipment for cash. ShopTech purchase equipment for 7,000 taka. If someone buy equipment on cash, we have to take the entry in equipment from the asset side and subtract the money from the cash from the asset side. Number 3, purchase of supplies on credit. ShopTech purchase headset and other computer accessories that are expected to last several months for 1,600 taka. Here the headset and the computer accessories are supposed to be supplies, so we have to take the entry in supplies from the asset side, and this is an on credit transaction. So this is a liability, so we have to take the entry in account payable from the liabilities. Number 4, service performed for cash. ShopTech receives 1,200 taka cash from customer for app development. Here the company give the service and take the money. So this is a revenue, and we have to take the entry in revenue from the owner's equity side and also in cash from the asset side. Number 5, purchase of advertising on credit. ShopTech receives a bill for advertisement. Here the company receives a bill for advertisement expense. So we have to take the entry in expense from the owner's equity side, and this is also an on credit transaction. So this is a liability, and we have to take the entry in account payable from the liabilities. Number 6. Service performed for cash and credit. Shoptech perform app development for customer and receive 1500 taka cash and bills the balance of 2000 taka. Here the company gives the service. So this is revenue, and we have to take the entry in revenue from the owner's equity side, and also receive 1500 taka on cash. So we have to take the entry in cash from the asset side, and also the company receives a bill of balance of 2000 taka. So this is a account receivable. So we have to take the entry in account receivable from the asset side. Number 7. Payment of expense. Shoptech pays the following expense on cash: rent 600, salaries and wages 900, and utilities 200 taka. So we have to take the entries in expense from the owner's equity and have to subtract the money from the cash from the asset side. Number 8. Payment of account payable. Shoptech pays 250 taka advertisement cost. Now we go the number 5 transaction. Here we had a liability. Now in number 8 transaction we pay the liability. So we take the entry in the account payable from the liabilities and subtract the money from the cash from the asset side. Number 9. Receipt of cash on account. Shoptech receives 600 in cash from customer who bill for service. Again we go in number 6th transaction. Here we had account receivable. Now number 9 transaction, we take the money from the customer. So we have to take the entry in account receivable from the asset side and also in cash from the asset side. Number 10. Withdrawal of cash by owner. Mr. X withdraw 1300 taka in cash from business. So we have to take the entry in drawing side from the owner's equity and subtract the money from the cash from the asset side. Now this is all my part. Thank you.
Hello guys, today we are going to learn about tabular analysis, or also known as transaction analysis. To learn transaction analysis, we need to understand few things first. Those are the assets, liabilities and owner's capital. Basically these are very important parts of tabular analysis. Assets consist of four. Here in our given example it will be 4, it could be more. Those are the cash, account receivable, supplies and equipment. Basically these things that provides that treat as assets are the main property. We also say that the things that a company has always, and there's treat as the assets. There's a different thing is difference between supplies and equipment. Supply is a thing that give us services less than 1 year, and equipment longevity is more than 1 year. Then the account receivable, this account receivable shows us the money we or the required company is going to get from other companies. Actually it's a due for other companies. This is the money we are going to get, or the company going to get. Then there's a cash. It is a cash that company has. Then the liabilities is basically also known as in accounting term is a type of a due. For our given example we have two types of liabilities. One is note payable, another is account payable. Account payable is that money we have to pay to the other company, and note payable is also similar, but there is some differences. There is a slight difference between note payable. Technically this note payable is basically for the bank or other financial firm that provide money or lend money. And then is the owner's capital, or also known as owner's equity. In owner's capital we have 4 things, and these 4 things are fixed. There's the owner's capital, then the revenue, drawings and the expenses. Basically owner's capital is the cash that company has in hand when he start the company, or if we consider it as the beginning of the month. Then the revenue, well, revenue is the profit, we know.
Then drawings is for personal use. If the company owner borrow some money from the cash, it will be in the drawing side. And then the expenses is that any company do any kind of expenses like rent, that rent, advertisement, salary, utility. These are all terms are considered as expense. He have to pay for those things. So now let's go for our today's example. Well, we can see that the example says that Trixie May started her own consulting firm, Matrix Consulting, on May 1, 2017. The following transaction occurred during the month of May. So we have to build a transaction analysis for the month of May for Matrix Consulting firm, that owner is Trixie May. So let's go for it. And the first one is that May 1, Trixie invested taka 7,000 in cash. So what Trixie did, Trixie invented 7,000 taka in the business. So as we know, let's go in the table. So she invested 7,000 taka. So it will be as usual as owner's capital, because she have the money in the beginning of the company, and also the money is in cash, so we will be entry it in the cash and owner's capital. Now let's go for the second entry. Second entry is paid taka 900 for the office rent of the month. What Trixie did, Trixie paid 7,000 taka for the month, 900 taka. So here is the entry that in May 2 she paid 900 taka cash. As we know that rent is a expense, so we will put it in a expense section, and you can see that we have a parenthesis here. Basically this parenthesis as a treat as a negative figure, that this is the amount we are going to subtract from our cash when we finalize our tabular analysis. Then we have third entry is past taka 600 of supplies on account. What Trixie did, Trixie bought some supplies the May 3rd, and she didn't pay for that, so we will put that amount as the account payable that she has to pay, and as she bought some supplies, we will put it also in the asset section as a supplies. The next entry is paid taka 125 for the advertisement in the county news. Trixie paid some money for advertisement. This is also is a expense. So as usual, we will put it in the expense section as a negative figure, and also put it in the cash. She paid for the advertisement, so we will subtract it later. Now let's go for the next entry. Next entry is that received taka 4,000 cash for the services performed. What Trixie gave some services, provided some services, and got 4,000 taka in cash. So we know when we sorry for the inconvenience. Let's go for our next entry. Our entry was that Trixie received 4,000 taka cash for the she performed some services. So as we know that if someone perform any services, it will treat as a revenue. So we put this in a revenue section, and as Trixie got the money, so it will be in cash, so it will be in a cash section also. Go for the next entry. It said withdraw taka 1,000 cash for the personal use. That the Trixie withdraw some money from the account of the company. So as we already told that it will be as a drawings, so we will put this as a negative figure in drawing section, and also will be subtract from the cash as 1,000. Let's go for our next entry. Next entry says that in May 15 performed taka 5,400 of services on account. The Trixie performed some services, but this time she didn't pay and got money, or she didn't get paid. She will be paid later. So this is the money she is going to get from someone she performed service for. So we will put it as a asset section in account receivable, and also as it can be also treated as a revenue. So we will be put this in a revenue section as a 5,400. Let's go for the next entry. It said that on May 17 paid taka 2,500 for employee salaries. On May 17 Trixie paid the employee salary. So we know also we already told that salary is the type of expense, so we will be putting this 5400 entry as a in the expense section as a negative number, and also going to subtract the amount from the cash. And in May 20, when Trixie paid for the supplies purchased on account on May 3rd, on May 20, what Trixie did is she paid the money that she was due on May 3rd, and this account that she bought some supplies but didn't pay the money, and May 20 she paid the money. So we'll subtract the money from the cash and also from the account payable, as she already paid, there is no due. And let's go for the next entry. It said that May 23rd that Trixie received a cash payment of 4,000 for the services performed on account. So Trixie got 4,000 taka from the from the from someone she performed service but didn't got paid before. So as usual, we put, as she got the money in cash, so we'll put this in a cash section, and also remove also subtract this from the account receivable, as she got the money from this 5,400 for 5,400, and she got 4,000 from them. Let's go for our next entry. Our next entry is that Trixie borrowed 5,000 from a bank on a note payable. It already told that Trixie borrowed some money, 5,000 from a bank as a from note payable. So we'll already told it as a liability as a note payable, so we'll put this into in our note payable section, and as she got the money in cash, so we'll put it also in a cash section. The next one is that purchased equipment for 4,200 on account. So Trixie purchased some equipments on 29th May, sorry. So we'll put this on a equipment section first, as she bought some equipment, so it will be an entry for equipment 4,200, and she didn't pay the money as well, so it will be as a liabilities in 4,200 note payable. And then our next entry is, or last entry, is at May 30th. She paid 275 for utilities. So what Trixie did, Trixie paid a utility bill 275 taka. So as we know, utility as an expense, we'll put this in an expense section, 275 as a negative figure, and also subtract from the cash. After doing that, what we're going to do, we're going to add all of our entries. So first we'll be add our cash section here. So if we add, our final output will be 14,600. Our account receivable is 1,400, supplies is 600, and equipment is 4,200. Total is a 20,800 takas asset we have, or Trixie have in his account. Then we have the liabilities. The 5,000 is note payable, and 4,200 for account payable. The 600 we already paid, so that won't be counted. So the final liability is 9,200, and there's the owner's capital. So first we have the owner's capital as 7,000. Then we have the revenue is 9,400, drawings of 1,000 taka, and expenses 3,800. So if we add all of them, it will be 11,600. And now if we add the liabilities and owner's capital, we will find the exact amount we have in our asset is 20,800. That's all for. Thank you, guys.
Assalamu alaikum. My name is Janatul Fari and my ID is 151155183. Our presentation topic is transaction analysis and basic accounting equation. My part is income statement. Now I am discuss about income statement. An income statement is a financial statement that reports a company financial performance over a specific accounting period. A financial performance is assessed by giving a summary of how the business incurs its revenues and expenses through both operating and non-operating activities. The income statement is divided into two parts, operating and non-operating. The operating portion of the income statement discloses information about revenues and expenses that are the direct result of regular business operations. The non-operating section disclose revenues and expenses information about activities and that are not directly tied to a company's regular operator. Here I am giving an example of income statement, which is a matrix consulting company's income statement. And in income statement we should write the company name first, then write the statement name, which is income statement, and then must be write the date of the month ended. Now we seeing here is 3 rows, one is particulars and 2 of these taka. We should write the final taka, of revenues and expenses, the right side of taka, and the left side of taka we should write the normal balances of expenses or others revenues. Here matrix consulting companies revenues is 9,400 taka, 9,400 taka. Expenses are rent expense 900 taka, advertising expense 125 taka, salary expense 2,500 taka, utilities expense 275 taka. Total expenses after summarizing we should write the right side of taka. Then now how can we know it's net income or net loss? If revenues is more than total expenses, then it's net income. If it's not more than total expenses, then it's net loss. Now we are seeing in matrix consulting company, it's a net income because revenues are more than expenses. Well, now we should calculate it and then find 5,600 taka. That's all my part. Thank you.
Hello viewers, I am Muntaha Mashrafi. My ID is 151155078. Today we are going to learn about balance sheet. Balance sheet is a formal financial statement that the company prepared to provide the user a clear information about the financial standing of the company. It keeps track of the asset, liability and owner's equity. Now it is called balance sheet because asset side will balance out liabilities and owner's equity. It is the format of balance sheet. Previously, we have learned from our tabular analysis that assets include cash, accounts receivable, supplies and equipment. Liabilities include note payable, accounts payable. Cash are liquid assets. Accounts receivable occurred when the company sells a product or provides service on credit. Supplies are current assets while equipment is long-term asset. Current assets are those assets which used up within a year, and long-term assets are used over several years. From liabilities, we know that note payable occurred when you borrow some money from the bank, and accounts payable occurred when you have taken service from a company or somebody but still have not paid the money yet. And owner's capital only include owner's capital, which will be added in our balance sheet. Now we can see that from our tabular analysis we have taken cash, accounts receivable, supplies and equipment, and our total balance is 20,800. And from liabilities and owner's equity we have taken note payable, accounts payable and owner's capital. Now our total balance is 20,800. So the asset balance out liabilities and owner's equity. I hope we have understand balance sheet. Thank you for listening to me.